Now navigate our discussion to the fundamental side of the story. Anirudh Garg, the partner and head of research at Invasset PMS, joins us early this morning. Invasset PMS, I beg your pardon on that one and apologies. Anirudh, good morning there. And I'm going to start off with your initial assessment of what do you make out, what has really stood out for you in the quarter gone by, the earnings that have stood out for you, sprung in a positive surprise. A bit of disappointment which is crept in from the IT name. FMCG basket too wasn't that encouraging. Banking sector led to some disappointment. What are you really picking up?
A very good morning, Nickey. Thank you for having me. I think you've answered it all. So when it comes to the earnings this season, we were very, very clear on what's happening in the market. One needs to take a view of what the next 2 to 3 years would be at. We at Invasset believe in something called a two-run theory, where we believe that currently we are in an old economy run, and which is further characterized by high growth, high capex, high money supply, higher inflation, and all these parameters tend to be higher. So we were very, very clear that the results this time would more be favorable on the old economy sectors, and that is what we have seen. When it comes to decoding the sectors, we believe that the domestic capex is at the helm of everything. Government going into an election year with 19.5% plus budgetary expenditures towards capex is, I think, unseen. The intention is very, very clear. This is the pocket where the results were expected and has delivered. So we are bullish on sectors which have delivered good results like capital goods, defense, railways, power, infra. We believe that these are the sectors that will lead the run further. When it comes to financials, as ever, they have delivered wonderful results. Our theory for financials was that public sector banks have undergone a major transformation in the past 5 years with the NCLT laws and the IBC laws coming in. The public sector banks were at the helm. Also, the books were cleaned up and the asset quality had improved. So we were very, very bullish on the public sector banks, and that is what we have been owning for the past 1.5 years. Also, the private sector banks, we predicted that they would undergo a time correction or a price correction. Yes, they have undergone a significant time correction. The results have been great, and I think now private sector banks for us are in an investable zone. We are bullish on the private sector banks also from here, but more bullish on the public sector banks. When it comes to consumption, there is a very, very interesting scene that we are seeing in this journey from $2 to $10 trillion that India is going through. The lower level of the strata, the lower consumption is, the numbers are not that good. The HUL and all the numbers are not good, but we have seen significant improvement in the top line and the bottom line in what we call the premiumization sectors. We have seen good results for Tata Motors. We have seen good results for DLF, amazing results for Ethos and companies like that. So yes, premiumization is something that is picking up in the consumption space. When it comes to pharma, I think the shallow cycle that the pharma goes through is now over, and all the concerns, whether it be US FDA or the pricing pressures in the US, are clearly reflecting, are moving away. Though we are more bullish on the domestic pharma and domestic consumption in terms of pharma. And yeah, this is how we analyze the results, and bullish on what sectors we told you, capex all right, and capex related.
Let's chat. Apparently, you've covered in a lot of ground and preempted some of my questions already, so I'm left with very few in that case. So I'm just going to squeeze in one more for you in that case. Talk about how you're playing the markets ahead of Diwali, ahead of what themes essentially you think will probably the theme for somewhat 2080, and will large caps make come back in a big way as compared to the broader counterparts, or you think the outperformance from the later will continue? Your assessment.
Okay, so our assessment, Nickey, is that how we see it is that currently this in an old economy run, the market hunts for value. And when you're looking for value, mid and small cap is the place that you have to look for. This is the, I would say, the broad space where you'll find these companies. And large caps for us, yes, they are in a comfort zone when it comes on an index level. But on a stock picking level, if you have to invest in the high growth industries in India, you have to go in for the mid and small caps. And we firmly believe that the rally that has happened in the mid and small caps, which everyone is talking about, is actually the catch up for the last 10 years of underperformance, which the mid and small caps gave. So yeah, the re-rating, what we call in mid and small caps, have happened. And from here, we still believe that the mid and small caps would outperform the large caps when going forward for the next 2 years. And when it comes to the themes, one has to take a view of not 1 year, but maybe at least 3 years. Yes, so we are again bullish on, as I told you, themes like domestic capex, because the global scenario is in a turmoil, and we are very bullish on the public sector banks and railways, defense, infrastructure, and power is something that we are
How about
focusing
new
on
age
going
companies?
forward. Yeah.
How about new age companies? Are you bullish on that as well? Because Paytm, Nykaa, or for that matter, now even Mamaearth, how closely are you tracking these companies?
So we are tracking these companies very closely, but we are not very, very bullish on them. Though we are impressed by the performance of Zomato. It's just Zomato and a little bit, I would say, Paytm. But yes, Mamaearth, we have not invested. Neither we are planning to invest. All the new age companies, I think we'll give them a couple of years to set in the competition to seep in, and then maybe since we are finding better opportunities elsewhere, we are not investing in the new age companies for now.
Okay, you've already put out the opportunities where you're looking at, perhaps. So we're just going to leave it at that. And thank you for taking out the time and speaking to us. And also happy Diwali well in advance to you from us, the entire Moneycontrol team.
Thank you, and happy Diwali to you and your viewers as well. Thanks a lot.